Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. I mean, it's so many things happening. Last time we talked, it was in the wake of the Iran crisis with Trump, the Trump administration, and now, it's this global coronavirus that people are supposedly worried about the financial markets.
People were worried about the virus. Maybe businesses will have to shut down and so on. What is the market doing about it, and what's its reaction?
Well, it's kind of funny because the news broke over a week ago, and markets in Asia, and China in particular, of course, declined, but the stock market ignored it completely in the United States and in Canada until Friday, at which time the NASDAQ had a big day, but then finished deep in the red, and then Monday the Dow fell over 450 points. So on one hand, I would sort of suggest that the stock market in the United States and Canada too, for that matter, aren't really even trading on the news because they ignored it as it developed for days and then fell. And I think it's sort of just, the media looks for an explanation for why a market moves up or down in any given day, and that happened to be, the biggest news item to talk about. But in reality, I think what really is going on is that, yes, some particular stocks did get hit. For example, Norwegian Cruise Line stock was down 7% on Monday. The Wynn Casino stock was down quite a bit too. And these are companies that are going to have some impact. Some of the cruise trips to Asia have been canceled. The Wynn owns the Macau casino. So we can expect its earnings to be hit. But there's no reason to think a Walmart is going to be really impacted by this virus, because there's no reason to really think it's going to spread and be some epidemic in North America. So I think what we need to do is step back and just look at the trends and the charts to understand what is happening. And when you do that, look, the S&P 500 was trading between 3,000 and 2,800 basically from July to November, and then it went straight up and went up over 10% without any significant pullback at all. And this year it was going straight up too until Friday. So I think this is just a breather for the markets, a normal pullback. Now that said, it's likely to go sideways before it really goes up higher in a meaningful way for several weeks, maybe even several months. So, for example, the last trading range was really from July to November, over 60 days, and we could be entering another 60-day trading range or even a 90-day trading range. And I think this is really the story for most markets now, including the gold and silver markets, which also had a tremendous run-up in December and have been going sideways really since New Year's. So I think that's really the big picture of what is going on with the financial markets at the moment.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company. with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Mike Swanson. Mike, with the markets seeming to have now a pattern of no more than 2.5 days down, then they always bounce up. Is that a pattern that you can actually trade on?
Well, in a certain sense, I think so. It's as you said, it's a pattern. It's been doing this now for several years. Sometimes it'll fall more than just 2 days and go down 3 or 4 days. That's what happened, for example, in August and last May, for that matter, too. But I think the way to take advantage of it, I think it's tough to play the S&P 500, these popular ETFs like SPY, and try to make a big return because they move very slow. And, if you're trying to make a big return, then it would mean because they've moved so slow, you're probably trying to do something really risky, like use futures or some sort of leverage. It's really kind of not a good idea. So I think the really smart way to take advantage of these dips when they do happen is to look for the individual sectors or stocks that look the best to you from a long-term perspective and trade those or use the dips in the broad market for entry points. So, for example, we talk about gold all the time, but, the gold and the mining stocks, they're going sideways, providing entry points for people. They're kind of establishing a trading range, but there's some markets that are sort of being more impacted by the news overseas that I think might be great compelling buys for the next couple of years also. For example, the energy stocks have really slid over the past couple of days, and now they're oversold in terms of the daily stochastics indicator, the RSI indicator. It doesn't mean they can't go a little bit lower, but if you look at, for example, the XLE ETF, it's at 55.41, and the low last year was 53. So it's not even 5% more downside. So I would suggest that someone who wants to actually try to trade and buy something on this, news of this coronavirus, and with the idea that it's overblown, which I think it is overblown for the whole world. I know it's hell if you live in one of these cities that have been sealed off and likely to be sealed off for months. It's not a fun situation, but that's there. The rest of the world isn't going to be sealed off or quarantined or anything like that. So I think you look for things that overreacted to the news, and I would suggest that some of the commodities overreacted and energy stocks overreacted. That said, it may take some time of up and down base building for those things to turn up and really have a big rally. But over the next, say, couple weeks, I think that might be the best way to take advantage of the action that we have seen associated with the coronavirus outbreak.
What about companies that make the face masks or surgical gloves? They're selling out of those items everywhere.
Yeah, I don't really know if there is, one play on that. One company to trade based on that. I mean, I think that's pretty much a common item that lots of companies make. Interesting though, there have been stocks. I would I'm not interested in buying them or trading them. But there's been several penny stocks, so to speak, that have traded up over the past couple days by being associated with the news. For instance, there's some company that has a patent to make air filters, and its stock has gone up, but they don't have any revenue, like $100 all year is their revenue. The stock has gone up. That's the kind of speculation going on in the market. And that's a sign that, look, even though the Dow fell yesterday and some of these sectors fell, there's still a lot of speculation going on. When you see people buying penny stocks of $100 worth of revenue, to try to play the news.
Well, and quite often, one or two of those things might work out, but as somebody pointed out, penny stock, for every one that goes up, 9 are going to die.
Well, and there's different qualities of these things, too. So, like, the one I'm mentioning has $100 in revenue, and there's another one that's bankrupt. The company's actually bankrupt, and the stock has gone up 100%. But you flip that to, the small cap world of mining, and these are companies that have properties and resources, and and they have market caps that I still believe are cheap, but historically are worth 25 million market cap, and now most of them got 5 million. Whereas these really super speculative things, with air filters and whatnot, $100 revenue, they're not even trading at 10 cents. But it's sort of like that's the way that market works, though. I mean, there was a time where companies were linking themselves to crypto and blockchain and Bitcoin 2 years ago or 3 years ago now, and were going up with no earnings or revenue or anything. And so I think this is sort of like that. But there are pools of people out there that trade these stocks, and I think in time those people will gravitate to the junior mining world where there is more real substance to it. But it's going to take, we're still so early in that trend that it's going to take gold going up more and silver going up more to get those type of people involved. I'm really speaking of American investors that use apps and, almost treat their trades like it's a casino. And I think our job is to get ahead of that type of person.
Well, you were mentioning, I remember in an interview a few months ago about how millennials trade, and they're still pretty interested in marijuana stocks, but still ignore gold.
Oh, yeah. And you can see that, for example, on Robinhood, which is the most popular trading app in the United States for millennials. But they give you a list of the top 100 stocks that people own on there, ranking them in order. Number one is Aurora Cannabis. And up until a few weeks ago, there wasn't a single gold mining stock on the list. And finally, one stock made the list, and I believe it was Yamana Gold. If it wasn't that, it was another one that's trading under $5. So it shows me that once again that, finally, one stock makes the list. Eventually there'll be a bunch of them on there in a couple years. I suppose it will take that long, but they also like cheaper stocks. That's what they're looking for too. So it's just a matter of time. I view the metals trend as basically where it was when I first bought a mining stock way back in 2002. Gold was under $300 an ounce, and it took about 2 years to get the public to get into it. And that's when the small cap stocks really started to take off. So, I think it's still early in the game, which is good to take investment positions and, take the time to look for which ones you want to buy and invest in. And one other thought on that is something that's happened since we last spoke, is that according to Fed Funds futures market now, the odds of the Federal Reserve lowering rates by the end of this year have now gone up to 75%. And when we last spoke, the odds were only around 55%. So that's a big shift in the likelihood of further rate cuts, further stimulus from the Fed by the end of the year. And that's the ultimate reason why gold has gone up and the big cap mining stocks have gone up, because it's really linked to the Federal Reserve policies of keeping rates so low, doing these now repo operations, and so forth. So from a long-term macro perspective, I think it's almost a necessity to own these things, to own gold and silver, to be diversified in a portfolio, because when eventually the next cycle does come and the Fed lowers rates even more and they get, so low they can't do it anymore, the upside for the bond market will be done. And the only thing then that will go up, that's a safe haven, for, trading on macro policy, will be gold and silver.
We'll have more with Mike Swanson right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, perhaps an unintended consequence of this drive for lower or negative interest rates is the banking industry doesn't make money from deposits anymore. The insurance industry doesn't make money from deposits anymore. And the side effect of that is at my last condo general meeting last night, they're talking about a huge spike in condominium insurance because there's so few insurance companies around the world, and they're taking big hits from floods, tornadoes, hurricanes, the fires in Australia, so we all have to pay for it. But they don't make any money on their deposits anymore, so the only way for them to make a profit is to dig directly into my pocket. Could this end up being a boomerang that really hurts industry or starts causing companies to go under? They just can't afford the insurance anymore.
Well, I would suggest that that in a certain sense is already happening in a preemptive way, meaning that where I just give an example, where I live, there's a local bank that just got bought out last week, and they have about a dozen bank branches. And I know people that work there. I actually know people on the board of directors at this bank. And over the past couple of years, they have told me in different conversations that they don't make as much money for the reasons you just spoke of. And also that, the competition, is able to weather the storm better, when the rates are so low than smaller banks as they are. And what ends up happening is companies that run into difficulty from these big trends end up having a choice. Are we going to shrink every year and then eventually be in danger of going bankrupt? Or are we going to give up and look for someone to buy us out and merge? And then we can get a return for, our bank holders, shareholders, and whatever. And that's what happened. No one put it to me like that, but that's what I think has happened. And this is going on all over the banking industry. Another example is the brokerage industry in the United States. Last year, they cut their commissions. Many of the top online brokers, starting with Charles Schwab, cut their trading commissions to zero. Then Ameritrade did it, E-Trade did it, and then a couple others did it. And next thing you know, Ameritrade, now that they face lower profit margins, they are merging with Charles Schwab. So this is what happens when in the financial sector, when regulations appear or when policies such as low rates are done that hurt the balance sheets and bottom line for across the sector. What happens is the giants of the sector use that to buy out their competition or force their competition to merge, and to just swallow them up. So that's what I think is really going on. Further centralization of financial institutions across North America, and it's just gobbling each other up with fewer and fewer kings at the top.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.